I'm going to go here and hey everyone, this is Will here with Flow Trade FX. I am bringing you a new video in the intra-week flow trading system. Today we're going to be talking about news announcements, and as intraday traders, we are extremely susceptible to news announcements, and in our specific markets, we experience the most chaotic influence from news and different economic releases. Say we were like daily or weekly or monthly chart traders, we would be less impacted by the average day-to-day news and would really have to pay much less attention to these economic releases. But as intraday traders, we're dealing with price ranges of 10 or of 20, 40 to maybe 50 to 60 pips on a day-to-day basis. Sometimes more than that, of course, sometimes less than that. But as an average, we're looking at about 50 pips. It's not uncommon during a news announcement to see price be just going to be going stagnant or in one direction and then jolt up in the opposite direction, come back, and then trade all the way lower. So those things are not uncommon to see during these news announcements where you get large impact. Price ends up moving in a direction and then comes back down and then ends up moving in an opposite direction if you get later news or just in general after, which puts you pretty much where you started. As you notice with this little hypothetical example, price ended up doing all this, all that, just to end up right back here, and that can happen intraday. Whereas if you were on a daily or a weekly chart time frame, you wouldn't even really notice that. It would have just happened and you would have kept it moving because you're looking at a much bigger time frame. Now, I'm going to give you some visual of this phenomena here in just a second. Bear with me. I'm going to upload my forex factory, which is the economic calendar I use, and it just displays everything fairly simply for you. You're able to both see the large impact newses, and it's all color coded, and it works out extremely well, as you will see here. Um, okay, so here we have the forex factory. It's a very helpful. It displays all of the different currencies and their related news that comes with it. And it breaks it down by time. So you see the time on each of them. It breaks it down by the day of the week and the day of the month. And it's just very, very intuitive to be able to use this website to monitor price action, starting with early and then ending at the day. And then as you see this little green highlight right here, it even highlights the current news announcement in which you are waiting on. It gives you your time here, and then you can change this time zone. So depending on wherever you are in the world or whatever market you're looking to be trading, you can set this time so that it aligns with the time that you desire, and then it will adjust all these times to match the time that you have set here for your time zone. Now, what I was breaking down about the impact, you see a category right here indicating the impact that the market may have, that the news announcement may have. And then this is the color coded differences that I mentioned just a moment ago, where you have the yellow, and then you have orange, and then you have red. Red being the most impactful, orange being the like in between impactful, the medium impactful, and then you have the yellow, which is a pretty much a low impact. And then sometimes you'll see even a silver, which is just meaning that it is a bank holiday for whatever currency that one is specifically dealing with. But at any rate, this is helpful to look at so that you know, okay, there's a high impact news at 7 a.m. for the USD. You're going to want to mark that in your calendar. You're going to want to mark that in your notes while you're looking at any USD pairs for the day. And it seems that there was actually a lot of USD news for the day. Not only these high impact, but you also have these medium impact news. which can also add to that initial high impact and low impact that you have, which can just create a very, very chaotic trading environment at that time. At any rate, get comfortable with this site, Forex Factory. It's very helpful, and I suggest adding it into your daily routine, just being able to sit at your trading desk in the morning or whenever you clock in to be able to check out Forex Factory, see exactly what releases are coming out for the day, and then be able to mark them on your calendars or even use a timestamp on your charts to be able to know and indicate when this is going to happen, because you're going to want to leave a blackout period, let's say 2 hours before this news event happens, to be able to give you substantial time to either assess where your trades are currently, if you have trades in any of the pairs with high impact news for the day, and then if you do have any pairs that you plan to trade, wait maybe until you see the reaction after the high impact news, because as I mentioned, it can get extremely chaotic. And today, a day like today, where you have all of these other um, news announcements for the same pair, just kind of like compounding together, you can either get some very sideways, uh, volatile movement, or you can get price movements that just go slightly in one direction and then booms all the way in the next direction. So, like, definitely be mindful of that and be able to prepare for that blackout period where, depending on where you are with your trade, if you're already in the market or if you were just speculating on getting into the market at that time, it might be wise to just wait until after all of the news announcements have subsided, and which this one would have subsided at 12 p.m. around noon, and they would have started to get extreme around 7 o'clock in that morning. So a blackout period of 5 a.m. would have been what you needed to avoid any of the chaos that might have lured you in at that moment and potentially threw off your trade. Now, I'm going to go back to this chart here to break down the example of both the blackout period and different scenarios, and if you are already in a trade or not. This will be able to act as a guide for kind of how you can maneuver when you are in a position approaching a large impact news, and pretty much what you would do in those situations. So if this is 8, we need to leave a 2-hour blackout period. So we call it, say, 6. 1 second. So we'd say this is about 6. Oh, it's not really a good 6. 6 a.m. Right here, this is your blackout period. Now, we know that there's this large impact GBP news, and we happen to already be trading the GBP USD. Now, since we're already in the GBP USD, we have a trade where we entered here and we have a stop loss down here and we have a profit target here. Now, if we were to leave this trade here past the blackout period of 6 a.m. and then price were approaching the large impact news, it's very possible that price can come all the way down here, take out your stop, end up coming here, here, and here, ending somewhere around your profit target. You'll see this happen very often if you are trading within the news boundaries, or it can happen where it happens in your favor, where of course price booms to your target first and then ultimately drops down into this stop loss area. But luckily for you, in that hypothetical example, you would have been out of the market because price already boomed and touched the top before dropping through the bottom. But so at any rate, you can see how the blackout period can be a bit of a gamble and less of a probable probability based trade. Now, given you're in the GBP, you buy here, and around the blackout period, say your trade is in profit about this point. You're not quite at your target, but you're definitely above your profit target, or you're definitely above your entry zone, and you would say you're somewhere like within the middle. Now, in this situation, if it's blackout period and you're approaching the market, you have two probable options. You can either close this trade, book whatever profit this is, or you can trail your stop up to break even, in which your trade will get out at no loss, no gain, or no loss with a potential gain to be able to get out of this market pretty much untouched, despite whatever may happen during this news. Now, that's pretty straightforward. You just trail your stop up towards your entry and decide if it's worth it to close out this trade if you're more conservative, or just trail your stop up and leave this to hit your target. If you're almost halfway to your target, you can go that route. And obviously, using the profit target uh, exit levels that we've mentioned in the previous video, depending on if there were any levels between here and there, you would obviously exit accordingly. But assuming that this is just your first level where there's a swing high here and there's nothing else in between, no round numbers, you would pretty much be able to close out a part of your trade if you wanted, and then allow the rest to hit that level if the news brings it further up. Okay, so that's pretty much it for that example. Now let's assume on the GBP, you enter around, 4 in the morning, 4 a.m. That's not really a great A. They pretty much both looks like an M, but let's try to get it a little bit better. Okay, it's not great, but at any rate, 4 a.m., 6 a.m., 8 a.m. So you're buying around here. Let's assume that you're just buying because the bias of the day is buy. For whatever reason, price has been coming up here, and it gives you this area right here to enter. Let's say this time price is about 3/4 to your profit target, and it's about 6 a.m. at this point. For this situation, you can simply just close out this trade. You see, I'm going to tell you why you would just close out this trade, because you would be giving all of this right here back just to make this small bit right here, just this small bit, as a risk reward standpoint. To give back all of this just to risk this, it doesn't make any sense. You'd be better off closing this. The news is extremely volatile. If you need to get another entry at a later point in time, you can always find that entry as long as the market is lining up with your key levels of support and resistance. Otherwise, you can look for that on a different chart and close this chart up, or continue to look into this chart after the news announcement has passed. But in that scenario, you wouldn't be looking to wait it out anymore. Of course, you can book a little bit of profits. You could have trailed your stop all the way up a little bit higher from down here. You could have trailed this stop up here even more, and just left it really tight where you would have booked some profits. You might have gave a little bit of profits back, but you could have also allowed it to wait and see if it hit your profit target. But Me, I'm a bit more aggressive as far as this goes in this situation. Um, I would rather just take what I can from that, given that the market has offered that before this large impact news announcement happens, where price can move very sporadically, like fairly fast. You don't want to get caught up in different scenarios where you give back pips on a what would have been a profitable trade just by hoping and thinking that the price would hold when sometimes it doesn't. So in that scenario, it would have been best to, like I said, take profits on that and look for further opportunities elsewhere. All right. Now we've talked mainly about if you were in profit at this point. Now let's assume that you took this buy trade, and although your stop loss hasn't been hit, you are below your entry, so you see a loss. It's not very much, just a little loss at this point, and it's about 6 a.m. Your stop loss is still a decent portion away, and of course, you can't necessarily like trail your stop up any higher, although you could, but it just if you're gonna do that, you're better off just like closing this trade entirely. You could take a small paper loss of a few pips in either direction. You either take a little bit of a win or take a little bit of a loss. If price manages to be floating around your entry more or less by the time the blackout period starts, you can either close this out for a little profit or a little loss at this moment. At any event, it's not going to affect the grander scheme of everything. To avoid going and hitting your stop loss, you can wait until after to see what the reaction is of this large impact news once the blackout period has ended. And then you can take a trading opportunity if one is presented at that moment, given that the support and resistance levels have still been respected and maintained. Um, Otherwise, you can, you know, leave your trade to be potentially hitting this stop loss level below by the time the large impact news strikes. And that's pretty much it. I would just take the paper loss or the paper gain, the small one, and just protect my stop loss, preserve my capital, and to be able to look for trading opportunities elsewhere. Because large impact news, it really throws off the probability of our trades. But let's go over one more example here where let's say this time you're in a definite negative where prices is already down here around 6 a.m. and it's not quite at your stop loss yet. It's maybe 3/4 of the way, but you're definitely seeing the full loss of what you are. You're definitely noticing the drawdown of capital at this point. What I would do actually, and this is going to be contrary to what most people would believe to do, is I would just kind of I would say you have two options. One of the options is to leave your profit target or leave your stop loss exactly where it is and allow the market to do its thing through the blackout period all the way up until the large impact news strikes. And I say this for one reason. One reason would be that uh, you've already been in loss at this point, and you see that price has already dropped down and it hasn't quite hit your stop loss. So that probably means that there hasn't been much momentum to that area. It might just be retesting down to the previous levels. And I can tell you this for certain. I've had trades where price came within pips of a stop loss of mine before retracing back up, rallying, and even hitting a profit target that I may have had. And if I had closed that trade out or moved my stop up, I would have created a losing trade for myself, given that price never hit the stop loss. It would have came close, but it didn't hit. And I've seen that with my own eyes, and I've experienced it in my own trading accounts. On different occasions. And in this situation, I believe I would just operate exactly the same way, where I would leave this trade to do its thing. You've already realized about 3/4 of your loss. So to risk just the final bit of what you intended to risk initially, to potentially make all of this back, that almost makes your risk reward a little bit better in that scenario. You're risking just this to win this potentially. Now, and also, aside from just leaving the trade, you can just close it knowing that you've already pretty much taken the 3/4 of your loss that you would have taken if you just left it to run that additional 1/4. But hey, those things happen. Not every trading setup gets the follow through that we would like to see, but it's about having a statistical advantage over time to where having price where we place trades where our risk management or our risk to reward ratio is always in our favor at the minimum 2 to 1, and just being able to always have our losses end up being less than our wins is how we are going to maintain to be profitable in this trading strategy specifically, and then to be able to implement different understandings of economics calendars and blackout periods, which you're going to want to adopt uh, into your daily routine as well, to be able to practice looking at the economic calendar, noting the large impact newses of the day for what currency pairs and at what time they are going to be coming out, marking them on your chart or marking them in your notes somewhere to be able to reference them when the time comes, and then being able to set aside 2 hours prior to the news announcement coming out as your blackout period, to where if you have any trades that are currently open, like the scenarios that we've mentioned, we know how to now manage those trades to still end up like potentially being able to profit or minimize our risk as much as possible. And what you would do in those situations leading up to that blackout period and even through that blackout period to the actual release of the news announcement. That pretty much sums it up for the news announcements, how we're going to be trading them, how we're going to be managing our trades through them if we are in trades already, and pretty much how to know how to avoid them when we are yet to be in trades, and especially if the trade is not being especially if we have support and resistance levels that aren't being respected around those levels. But at any rate, that's the end of it for this video. I appreciate you and I thank you. I'll see you on the next video.